You know you're an American icon if the president first praises you and then spits all over you when you're not loving him back. You know you're slowly starting to get in trouble when your customers are becoming too old to sit on your products and you're selling less and less of them. You're starting to become really nervous when you see that the technology of your product will be inevitably outdated in a few years. And everybody will be sure that you're desperate when you're hiring a German as a CEO because of his marketing abilities. What they don't know yet is that this was the smartest move you made in a long time. Jochen Zeitz came on board as CEO, Executive President and Chairman of the Board of Harley-Davidson in February 2020, and the problems he and his team are expected to resolve appear to be huge. Harley was once a brand of the young and wild. Today, the average age of its customers is more than 50 years. And they are losing customers and even worse, also market share. So it's not only that less and less younger people ride motorcycles, the ones that still do start to shift towards other brands. As an American brand, Harley-Davidson mainly produces its bikes in the US. The production costs are high and the globally increasing costs for raw material, subcomponents and logistics also add to the headwinds the company faces. The inevitable shift towards electric mobility will not only require a drastic change on Harley-Davidson's technological heart and soul. There's hardly any other motorcycle brand in the world that is emotionally that connected with the sound and the feel of its combustion engines. Every single one of these challenges alone could bring a business into serious troubles or even break a company's neck. Bringing Jochen Zeitz in charge in a critical situation like this only surprises at the first glance. A lot of you may not have heard of him yet, but he's the reason that you still know the brand Puma and that a lot of people are willing to pay several $100s for a pair of Puma sneakers. When Jochen Zeitz became CEO of Puma in 1993, he was just 30 years old and the youngest CEO who ever led a German public company. He transformed the dusty old Puma company into the modern and stylish brand that you know today. And he is the first non-American leading Harley-Davidson in more than 118 years of its company history. Although maybe unknown to a lot of people, he's quite familiar with Harley-Davidson. Since August 2007, he served as a member of Harley's board of directors. It also makes complete sense to install an absolute marketing expert as CEO and not an electric mobility specialist or a number cruncher. The biggest risk for Harley-Davidson is, in my opinion, not the technical change to the electric powertrain. The whole mobility industry is currently changing. There will be solutions for the technical challenges. Also, the issues on the cost side are something where solutions are on the horizon or even installed already. Since a few years, Harley now also produces its motorcycles in Thailand. Now, the biggest risk is the erosion of its brand, extending the core of the brand, freedom, adventure, America, to new and younger customer groups and to products that do not sound and feel exactly like the current products anymore. And at the same time, not hurting the relations to the proud and loyal existing fan base. These are probably the biggest challenges ahead. Challenges that require time, patience and a lot of money. But I think the situation looks a lot better than the stock price suggests. The financials are pretty solid. You just need to look at it with the eyes of a value investor. The net income eroded over the past years, with the decreasing revenue to a black zero in the first COVID year 2020. But in all of these years and even in 2020, Harley-Davidson reported solid free cash flows. When you put them in relation to the revenue, you see how much money the company is able to generate for its owners. Even in a crisis year like 2020, which was in terms of free cash flow generation actually the best year in company history. The balance sheet contains some long-term debt, no doubt, but they are well covered by the current assets, the finance receivables and the non-current assets of property, plant and equipment. There is nearly no goodwill in the balance that would polish its appearance. My own calculation sees the liquidation value at around $1 billion. Harley-Davidson also has a long track record of dividend payments.
They were reduced in the recent years, but even in the crisis year 2020, Harley still distributed a dividend to its shareholders. Harley's cash allocation priorities are first to fund growth, then to reward shareholders through dividends. Considering what they generated in terms of free cash flow, my own expectations are that they are very well able to finance both in the future.
This is all really good to see because Harley will need a lot of money for the economic and the technical development challenges of the next years. Considering this, let's look at the most important question for an investor. Is Harley's stock worth the price? Let's try to estimate the inner value. The most important and most difficult part is the estimation of the growth rate. In normal times, we would use the average growth rate of the free cash flow of the past 1 or 2 decades, which is about 6.5%. Let's compare this with the company's expectations. The revenue growth is expected to be in the mid-single-digit range, but they want to grow a lot in terms of financial services, general merchandise and parts and accessories. Plus, their operating margin is expected to improve, driven by increased efficiencies in several parts of the business. Harley-Davidson itself estimates to grow its profit in the next years in the low double-digit range. Although Harley's own growth expectations for the future are a bit higher, let's be careful and use the long-term growth rate of the free cash flow, as this is the lower figure. Harley's higher expectations and activities in this matter add to our margin of safety. We put the growth rate into my company evaluation spreadsheet and reduce it every year by 5% to accommodate for a potential slower growth in a bigger company. Now we add the 2020 free cash flow of $980 million and the sheet immediately calculates the discounted future free cash flow. We add in the shareholders' equity of about $1 billion that we calculated earlier in the video and receive a total value for the whole company Harley-Davidson of $11.5 billion. When you add the number of shares outstanding, the sheet provides you with a company value per stock of $75. As of beginning of February 2022, when I'm creating this video, a stock of Harley-Davidson costs about $43 at the stock exchanges. Compared with our value per stock, we have a margin of safety of about 42%. Outlook. The most recent figures for the full year 2021 indicate that the measures the company took start to work out. The decline of the revenue stopped. For the first time since several years, they increased their shipments of motorcycles again. The punitive tariffs of the European Union are settled. This will make Harley's bikes much cheaper in an important market and will likely contribute to further future growth. Harley is spinning off LiveWire as an individual company and brand. This is probably a smart move as it will A. Flush in extra capital, which is needed for the development of the electric bikes, and B. will support marketing-wise with a smoother transition to electric mobility, as it reduces the risk of a dilution of Harley's brand core. There are still technical challenges regarding the transition to electric motorcycles. It is easier to position a big battery in a car than in a motorcycle. The space is simply limited. But the development of higher energy density of batteries is already in progress in the whole mobility industry. In a nutshell, the current price offers a very interesting opportunity. I see the biggest risk in the transformation of the brand, but it looks like they took a lot of smart decisions to tackle this. Great businesses are rare and hard to find, but in this video I analyze another strong company that you can watch if you click right here. See you in the next video.